Let's look at the difference between investment banking versus investment banking operation. Investment banking is a broad term that refers to the business of helping companies and governments raise capital by issuing and selling securities, such as stocks and bonds. Investment banks provide advisory services to clients on strategic financial decisions, such as mergers and acquisitions, and assist in the structuring, underwriting, and marketing of securities. Investment banking operations, on the other hand, refer specifically to the back-end operations that support investment banking activities, such as market making, risk management, settlement. Let's look at an example to understand the differences between investment banking and investment banking operations. Suppose a company XYZ wishes to raise capital by issuing new shares of stock. The company might turn to an investment bank for assistance in this process. The investment bank would provide advisory services, such as determining the appropriate offering price and the optimal number of shares to be issued. The bank would also underwrite the securities, which involves purchasing the shares from the company and then reselling them to investors. In this example, the investment bank is primarily engaged in investment banking activities. The bank is providing strategic advice and is taking on significant risk by underwriting the securities. The bank is also responsible for ensuring that the shares are sold to the appropriate investors and that the offering is in compliance with regulatory requirements. Investment banking operations, on the other hand, refer to the back-end operations that support investment banking activities. These operations might include market making, risk management, and settlement. For example, if the investment bank in the above example engages in market making, it might use its own capital to purchase shares of XYZ stock to ensure that there is a market for the shares after they are issued. If the bank engages in risk management, it might use various financial instruments to hedge against the risk of the stock price declining. If the bank engages in settlement, it might ensure that the shares are properly transferred between the various parties involved in the transaction. In summary, investment banking involves providing financial advisory services, underwriting securities, and facilitating the issuance of new securities. Investment banking operations, on the other hand, refer to the back-end operations that support investment banking activities, such as market making, risk management, and settlement. While investment banking and investment banking operations are related, they serve different functions within the financial industry. Thank you for watching.